Okay, friends, we're deep into earnings season. Let's talk about it on the weekly update. Okay, friends, let's take a look at the market, and we've got an earnings blockbuster to talk about. Here's what you need to know. First up, earnings season has begun, and the numbers are fantastic. First, we're going to take a look at the market. Here's the market the way we've always been looking at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average. What you've got here, these were the jitters leading up into Liberation Day. Then we had Liberation Day where we entered into sort of like a market crisis moment. And if you remember during this time, one of the things I said was there's going to be some pretty rough sledding because there's a lot of news events that need to resolve during this time. But when we get into the back half of April, as earnings season starts to roll out, I expect a lot of this rough sledding to heal itself, and that's exactly what happened. Where we sit today, we're over our 50-day moving average, and I think we're going to make an attempt on the 200-day moving average as well. Here's the reason why, though. This is all just trading stuff. Are we still in a news-dominated market? Absolutely not. The reason why the market is doing this, earnings have been fantastic in the big companies that matter. First up, we'll look at Meta. This is from Quarter. They actually have really great ways of looking at, how companies are doing. But here's Meta. Revenue grew, and this is a company at scale, right? Like, I think, 1 out of every 3 humans on the planet are using a Meta product somewhere. Their revenue grew 16%. Their revenue grew 19% on constant currency. It's crazy to see a business at this scale growing this fast. It's unbelievable to me. Margins are 41%. If you have a 41% margin business at scale growing fast, guess what? You're doing really well. Unsurprisingly, earnings per share up 37%. What I'm showing you here on the screen, 5-year earnings per share growth. Meta in Q1 of 2020 was earning something like $7.30 a share. We're all the way up at $25.60 a share. So if you want to know why is the market as high as it is from 2020 to now, is it all just fake money sloshing around? Absolutely not. Businesses are executing. Meta had a fantastic quarter, A+ quarter. How about Microsoft? Microsoft has been a dog recently. They've missed a lot of their earnings. This was a return to form for them. Revenue plus 13%, earnings before interest and taxes, 16%, margins 45.7%. And if you look here, everything's growing. Most important to Microsoft is growth in the cloud, 21% cloud growth on a very large number. That's pretty good. Even productivity in business, right? Like, I don't know, Microsoft Word. Like, how much growth can there be in Microsoft Word? Well, how about 10%? We'll take it. Just amazing growth anywhere you go. We'll look at Amazon. Amazon was, so Microsoft, if Meta is an A+, I would give Microsoft certainly an A-. Fantastic quarter for them. Amazon, solid B- here. But Amazon, now we've got tariff impacts, we've got China exposure here, but they're still growing revenue plus 9%. AWS, cloud, Amazon Web Services up 17%. These are big numbers. Earnings per share up 62%. These are big numbers on large at-scale businesses. There's a reason why the market is going up. And then Microsoft, we already took a look at them. Apple probably had the weakest. They had a miss on services, but, I'm not worried about Apple either. I think, relative to what's going on, tariffs and everything else, I think Apple's doing fine. So what does it all mean? Our earnings blockbuster? Well, until this week, we have been in a news-dominated market. And news-dominated markets are highly volatile and arbitrary. What Trump tweets at midnight is going to move the market up, down, or sideways. And I really don't like news-dominated markets. I don't like trading in news-dominated markets. And for the most part, if we're in a news-dominated market, I will tell you to just bury your head in the sand and don't pay attention to it. That seems to have paid off. News-dominated markets, the situation that we were in the early part of this month, always end when economic reality shows up in quarterly earnings. Doesn't mean it always resolves positively, right? You can have the fears in the news-dominated market, and then their quarterly earnings show up, and they can be a disaster. And then guess what? You're going lower. But I was very confident that Q1 earnings were going to come in extremely strong, and we're seeing that. Earnings this quarter were so good that many large parts of the S&P 500 have retaken their 200-day simple moving average. Speaking about Meta and Microsoft there, and that's how it starts. A couple companies will retake their 200, and then eventually that will pull the market up to retake its 200 fully, and I expect the broader market to follow. So how has this week been? Fantastic. Am I worried about the stock market here? Absolutely not. Does this mean this whole event is over? No. And that's what I'm going to talk about next week. But for right now, we've got great news. The market is healing. Things are fantastic. Enjoy your weekend. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.